This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. And it was a little bit of a snooze fest there in the live cattle, but good to see that we aren't falling out of bed again. We're kind of seeing cash soften up earlier in the week, but starting to get some firmer bids here in the back half with Packers raising bids to 114 there in the Midwest, which is halfway encouraging. We would like to see that confirmed, and maybe consecutive weeks of a little firmer cash would really help this futures market. A couple key technical levels that we're looking at going forward, not necessarily tomorrow, but more significantly in next week's trade. It's 106 for that August contract. This was previous support, now becomes resistance, and the breakdown point from May 30th. If we can claw back out above here with consecutive closes, I think that invites new buyers into the market, and we could see futures propel a little bit closer to 109 to 110. Now, on the feeder cattle side of things, we've seen a nice rebound here over the past couple sessions. This morning started out under quite a bit of pressure, but again, rebounding off of those lows, which is very encouraging. 140 is a huge line in the sand. If we can get consecutive closes out above here, I think there's room to run to the upside. 145 to 146. The thing to keep an eye on there, though, is grain prices going into next week's trade, with a lot of volatility expected with crop progress report and a USDA report on Tuesday. Wrapping things up with the lean hog market. Lean hogs been kind of hugging that 200-day moving average for the better part of the last 5 sessions, starting to come off of that a little bit more, which is encouraging. Also encouraging is the fact that we saw China step back in on exports here this morning for the 3rd consecutive week. If this becomes an ongoing trend, which we think it has the potential to be, we think there's more upside to run in this market. If we can get back out above technical resistance, which is about 87 to 88, I think that encourages new buyers to step in. Now, the thing with the lean hog market is the fundamentals, we like to be long. The chart, not so much. So we'd like to see the chart get a little bit more friendly before we get overly excited about the longer term prospects of higher prices. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.